Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver, gold, platinum, and palladium all rising rapidly. All green across the board. We have gold at $1,661, up $96. Silver, $14.20, up 84 cents on the day. Platinum, $698, up $56. And palladium, $1,965, up $227. Gold and silver are rising. Have we finally seen the bottom? Have we hit the bottom and our prices ready to take off as we are pumping all this COVID-19 money into the economy, which is in return going to push precious metals as the safe haven demand? This article from Sharpixley is going to explain physical gold and silver making their move, the top reported countries for COVID-19, and I also have another article talking more about this dollar pumping scandal that we're doing as money printing ramps up. So before we start, make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. Let's see if this video can get 100 likes. Every single one, you guys like the video. I know we can do it. So let's jump into it. Physical gold and silver making their move. It is a funny world. Today, gold and silver and PGM prices appear to be soaring. Perhaps not before time, but global equities are also rising again too. Although we still feel the seeming recovery will be short-lived, U.S. equities tend to set the pace, and given at the current rate of the virus spread, the U.S. may well become the nation recording the highest number of virus cases of all, higher than China's reported total. By the end of the week, that could set off another U.S. equity price fall once again this becomes apparent. So they're saying once people start to realize the U.S. is the top reported country for cases, this could throw things into a shamble again. Our guess at the top, or at the order of the top 10 national coronavirus confirmed instances by the end of the current week, based on the rates of increase in reported cases, is as follows, with both US and Italy moving above China and Spain not far behind. So we have number 1 is USA, number 2 Italy, 3 China, 4 Spain, 5 Germany, 6 France, 7 Iran, 8 Switzerland, 9 UK, and 10 Korea or South Korea. France may move above Germany, as the latter is currently reporting a flattening in virus case growth. It will be interesting to review the figures again at the weekend and see how accurate this league table is by then. China and South Korea in particular are both reporting a substantial downturn in new virus cases, which does suggest that strict measures being taken worldwide may be the beginning to halt the virus spread. If the huge significance of the U.S. outbreak level is confirmed, we could see yet another big equities downturn on Wall Street. The U.S. figure looks likely to exceed 50,000 confirmed infections by the end of the total day today, and if that doesn't put a dampener on equities gains, then well, I don't know what will. All precious metals have seen big price upturns today, but in our view, gold is the big standout at the time of writing this, and back to the high levels it has achieved a week or so far, being brought down sharply. Right now, the gold to silver ratio is around 116 to 1, so silver still is outperforming gold to some extent. However, price of gold seems to be hugely volatile, with apparently engineering $60 to $70 or more takedowns being rapidly reversed, and vice versa. The apparent non-availability of physical and gold and silver seems to be driving the market at present, in what causes futures market participants to ask for delivery rather than just roll their positions over as they usually do in this case. It would be a whole new ballgame with huge squeeze on probability of non-available supplies, which could lead to massive price spikes. So they're saying not only is COVID-19 and all this stuff going to affect prices, but supply and demand, the surplus, could be a huge player in the game to rise prices, because if the supply cannot meet the demand, then that's going to shoot the price up. So, as for other precious metals, the whole complex has been lifted by the gold price pickups. But the gold to silver ratio, as I write, is still at 119 to 1, suggesting silver is still behaving relatively poor via gold, and actually it's around 116 to 1 right now. So even so, its percentage rise has been very beneficial to silver investors who have bought the price fell below $12 Silver price, according to Kitco.com, is currently in the $13.60 range. And right now we see silver sitting at $14.20. So PGMs have been sucked up as well, along with the gold price, but we remain skeptical about their long-term performance. Particularly palladium, even though this has seen a big price spike up in today. Platinum is perhaps better long-term bet, as it tends to make moves more commensurate with gold. Palladium is altogether more volatile and dependent on the other state of the automobile market, which appears to be hugely diminished globally for the time being. The metal price is being buoyed up. Perhaps better fundamentals at the moment could see diminishing rapidly sharp motor manufacturer demand continues to fade. People aren't buying while they are confined to their homes and the earnings are at risk. All precious metals, though, could yet come under pressure due to margin calls by those who have been sucked into buying equities with borrowed money. Optimistic investors never seem to take lessons from the past seriously. COVID-19 coronavirus effects are far from played out yet. Things could still get worse before they get better. If they do, that's bad for equities, but perhaps more positive for precious metals, particularly gold. And I think silver is as well. So I thought that was a great article I wanted to share with you guys and gals. So next we have silver prices rise as coronavirus money printing ramps up. Silver and gold prices behaved more like traditional haven alternatives to major currencies this week, rising on Monday when U.S. authorities announced massive stimulus to try to deal with the economic fallout of coronavirus. They're talking about shutting down bars, grocery stores, only essential stores basically, starting last night at 12 p.m. will be open. The Federal Reserve revealed unprecedented measures allowing its monetary watchdogs to buy treasuries and agency mortgage-backed securities in the amounts needed. This is effectively unlimited quantitative easing, also known as QE. Of course, it should be no surprise that if this move gave precious metals a lift, one function they fulfill in the markets is as counterweight so-called fiat currencies backed by nothing more than full faith and credit of their various administrations. However, why did safe haven fall? However, this year has seen some strange things going on in the precious metals market, supposedly also a final haven in times of financial stress. Both silver and gold have seen prices fall sharply this month, even as the potential full terrible economic impact of the contagion became apparent. So while this is perhaps counterintuitive, it is at least readily explicable, and in passing a reminder that no financial market, even the very oldest, behaves as expected all the time. The price highs seen at the start of this year proved just too tempting for investors to facing losses everywhere else, and particularly in stricken global stock markets. They cashed out their silver and gold to cover them up quite rationally. However, this week, things have changed with precious metals prices rising again as markets move to price and long-term credit easing, stimulus, and weak growth. So from here on out, it may be that both gold and silver start to trade again more like traditional safe haven assets, for which bad news turns out to be very good news indeed for bulls. So when there's bad news in the economy, this could be great for precious metals. That said, it would be wise to view brisk prices with rise and suspicion. Sharp falls in other markets yet leave gold and silver vulnerable to liquidation trades, as they have been so clearly yet this year already. Traders should also be aware of viewing these markets purely financial terms. It's always well to remember the physical realities of any commodity market. The coronavirus will shut down the other bottlenecks for gold and silver production just as it will for most other commodities. There are already reports of massive disruption to silver supply in major producers in Chile, Argentina, and Peru, which are some of the top producers for silver. Industrial users will be forced to pay a premium in order to get the metal they need, at least in the short term, and I made a video about that. I made a video completely talking about that. If you want to go check it out, I posted it, I think, 2 days ago. This may not be sufficient to alter overall financial market sentiment towards precious complex, but it's certainly worth bearing in mind. So I thought that was another great article. There's a lot of stuff going on, but prices are rising right now. For us precious metal stacker, this is looking good. It's looking like people are coming to their senses, and it looks like we are going to be in a very, very, very nice bull run. I hope it gradually goes up. If it goes up too fast, then there's probably going to be a correction or a sell-off happening, as people try to capitalize. So hopefully, it sits around mid $14 level, and then it can go up from there, maybe a small correction, then gets up to $17, $18, and then maybe we could be seeing that $50 silver like we saw with the 2008 credit crisis or in the 80s. So anyways, I'm going to wrap this video up here. If you did enjoy this video, make sure to smash the like button. Also make sure you subscribe because I do post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.